Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Friday, the 28th of December. A nice, enjoyable, boring day for the market to close us out. Exactly what I was hoping for personally. Didn't want to see a ton of selling. Wanted to see it kind of just end for the week and hold some of these interesting bearish retracement candidates that we're seeing, or at least I'm seeing across the board in the market. Hold them into next week. As we kind of take a quick peek. Not really, again, we got another week with no real earnings of any note, only a handful of companies, period, but they're all smaller size companies, so no big name earnings coming out next week. The week after, we'll start working back into a world of earnings. So, we got one more week to kind of hang out without much going on the earnings front, and then we'll kind of get back to business there. As you kind of look at the general price action of the market today, it was pretty similar, across the board. We saw a little gap up on the open, drifted back and forth all day long, ran up a little bit, closing down at the bottom. So we did kind of close down on the day, but it really was just one of those days in the market where not a whole lot happened. Not quite the doji I was hoping to see, but we did kind of see that general type of price action develop. A lot of indecision, nobody really willing to go too crazy one way or the other going into this upcoming weekend. So should be interesting to see if how things shake out early next week. There certainly are a bunch of bearish retracement candidates out there, at least ones that I've seen as I was going through my routine here today. So I'm looking forward to it for sure. Really not a lot to see over in the S&P, closing just shy of that 25. Of course, as we know, we're really kind of dealing with our major resistance a little bit further up, but we may not make it, especially when you kind of think about the NASDAQ kind of ran into that already, kind of ran into its more major level of support, now new resistance, and same with the Dow Jones. Both of those indexes were able to run all the way into that old support level, and that's kind of where they bumped their head and started to sell off some here today. Don't know if the S&P is going to quite make it, but there is still a little bit of room if we are going to rally a little bit further before the S&P. That broad market really challenges that level of support. And of course, over in the Russell, not a whole lot to see here. We were able to briefly push back above 1350. We're not able to hold that. We took it out on the intraday before basically kind of selling off of those highs and closing just below it. So, for any of us who are looking for retracements, I think this is the type of day that we wanted to see as a whole. Maybe I wouldn't mind a little smaller doji. Wouldn't even mind a little bit more upward movement for another day or two. Certainly, we haven't had any triggers or anything just like that. That will have to, if they're going to develop, they'll have to happen, early or at some point here next week from a broad market point of view. But definitely interesting development. And I was hoping, we've seen so much selling, and a lot of times when things start selling, it gets read real quick, right? And so, I was hoping to see one of these type of days as we wrapped up. So, I guess I should ask for things a little more often. So, we'll see where it takes us. Over in our sectors, we're going to see very similar situations. Over in the material sector, working back into that old zone, seeing a little bit of selling develop off of that area. As some sellers were definitely coming in into this sector. Not anything dramatic or anything like that today, only down 0.5%, but kind of makes sense in that general ballpark where we're running into that trouble as we're kind of looking at potential support zones if we do develop that retracement. Of course, we can and probably should identify this swing low that we put in on Monday, and we still have that longer term general area of trend line that these guys are working with, but they're a little ways away from it currently. Over in energy, found some really interesting energy bearish trade setups, I think, for next week. Very similar. We've rallied up, haven't quite made it back to that old support level, which isn't a huge deal. It's I like when that happens, but it doesn't have to happen. Kind of getting smacked by that 9 EMA here today. So a little bit of selling. Again, we haven't really turned this around just yet, so we're still looking for some confirmation on this, broad market pullback, but definitely seeing some sellers step in, in the energy market. If those are some areas where we're looking, I think we're not unhappy to see. Over in financials, we were able to fill that all the way up, running all the way back into this old resistance / support zone, running into trouble at that price. A very interesting price point, in my opinion. Definitely an area where, yeah, you know what, if we see some signals, I could be interested, potentially from a bearish perspective. So again, we're kind of seeing a theme here, and it's pretty much across the board. It's just, what areas are you personally interested in? I think really for the most part is the question. We're seeing a lot of retracement candidates in all sorts of areas, including the industrial sector working back and kind of bumping itself ahead, just like everything else. As I noted, the last couple of days, I'm not opposed, but I'm not actively really all that keen on going very bearish on the industrial sector right now, simply because of that longer term trend line. Now, if we start seeing heavy selling again, good chance that line's going to get taken out, right? But if that's what we see, there's also a good chance that my financial bear setups are going to be doing pretty nicely, my healthcare setups, my energy setups, and so we're not going to be able to take every bearish trade that we see. I found a ton, and I was being as picky as I could possibly make myself be. And so, we have to find a way to say, this is an area that I'm focusing on. This is an area that I'm going to leave alone. And for me, at least, that long-term trend line within the industrial sector, while I would understand if people do trade into it from a bearish point of view, I think that will kind of be one of those tiebreakers. Yeah, there's going to be other areas for me, as long as that trend holds. But again, much like everything else, very similar price action day, gap up on the open, back and forth, closing near the lows of the day. Over in tech, again, ran back up into that old support zone, bumped our head. Basically the same song and dance that we're seeing pretty much everywhere else. A beautiful day, but also a boring day to try to talk about price action in the market. Everything, very mellow day, especially by today's standards. We did see some back and forth intraday, but nothing too dramatic. So we're going to see some opportunities, as tech challenges resistance going into next week. Over in the staples sector, have a little bit more room. We haven't ran into the resistance levels that so many of our other areas are kind of challenging right now. We did kind of bump into that 9 exponential moving average, and that's kind of where we peaked out here today. I am open to bearish plays in this sector, but honestly, and I think I brought this up yesterday, I like this sector a lot more from a breakdown, maybe a couple weeks from now, if that's the way it plays out point of view. There are going to be some interesting retracement candidates for sure, and I'll definitely be open to those type of trade setups. But I think over in the staples sector, this long-term level of support, which hasn't broke yet, very well may not break, right? That should be pretty difficult. We breached it this week on their weekly candle, but we were able to clearly close back above it. So we may not be breaking back below that. Maybe the support level holds. So for me, I think that signal breaking that is going to be a much better signal within this sector personally than the overall average pullback that I'm going to be running into going into next week. Obviously, I'm still very comfortable from that point of view, but signal wise, I think this is an area I would like to see break from a bearish point of view. I think that's a really interesting signal if that's what we get, and we shouldn't assume that, right? It breached it, but it held, right? We looked at just a tail on the weekly chart. So should be interesting going forward. I didn't find as many great setups in this area as some others, and I wasn't really surprised with kind of the way it's been playing, out these last few days, but overall still showing a ton of weakness in my mind, on the chart side of things. So from a buyer's perspective, I'd be careful, in the consumers and staples. I know it's a, defensive area, and I get that. And so, good luck with whatever you decide to do, but there's just a lot of red flags. This support really is kind of the line in the sand, for me at least. So I'll be keeping a close eye on that. Over in utilities, I still think these are leave alones. Now, if we rally into this trend line, I do think that's going to open up the door for potential short-term bearish plays on the utility sector. We still have a ways to go before we get there. If we start to see downward movement, I would understand. But when you look at this chart, I mean, really, it's hard to make too much out of it right now. We're hanging out, a little bit above support. We're back in this range that we spent a lot of our, fall and summer hanging out in, right? And so this is just a swing trading wise. I don't think there's a lot of great signals. Like I said, if we can run back into this trend line and test that as a resistance level, that might make for some interesting, setups, I think at least. But we've got some time before that even hypothetically happened. So as I was, kind of going through my routine, to my surprise, not at all. I didn't have anything on the utility sector in my personal run through today. And I wasn't really surprised. I don't really like this really on either side, or as a bull or a bear. This chart very neutral in my opinion, with a little skew to the downside, I would say, but nothing dramatic. Over in healthcare, kind of ran back up, filled up that little remaining space that we had, after taking out our first level of resistance on Tuesday. We're able to work all the way to that next level here today. That is where we peaked out on the intraday. We did see some selling, pretty respectable level of resistance too, in my opinion. That old support level, pretty major deal. When that broke, that was definitely a very strong sell signal. Should be interesting going into next week over in the healthcare sector as well. I think a very interesting price. This should be a challenge area for this sector right now. Should be tough to break through that without any real momentum. Over in discretionary, interestingly, and I don't know what to make of it just yet, but we did break back above the support level. So we had this old support level. We were able to work back and close there, maybe arguably close a little bit above it yesterday. I think it could have went either way. We're able to push above it on the intraday. Did sell off to, for much of the day. So our candle is not looking all that strong, but it's not looking terribly weak either. We were able to close, and it's not a huge deal, but it's something. Right. Then again, find ways to differentiate one area versus the other. That is something I would have rather not seen. I like it when resistance holds me down if I'm looking to go bearish. Go figure, right? So interesting. If we see a little more downward movement, get down below that, I can very quickly change my mind. But as far as Monday morning, I guess, I don't think this will be an area that I'm, super jumping into just because of that. Again, it's a little thing, but we have to, as we can see, all of these sectors to a very large extent look very, very similar to one another. And, we can't trade everything. I guess we can, but probably aren't going to. It's so interesting that we're able to close that. Obviously, we still have a ton of overhead. I would not call that a buy signal personally, but I do have to respect that it was able to, at least for one day, break through that resistance level. Real estate, very back and forth day between this old support level and what's kind of developing as resistance. Again, I don't love this from a trading point of view going into next week. But with that said, if we do take out this low again, I could see a case to go bearish. I could even, and I wouldn't make it, but if we can take out this resistance level, I could see a very short-term case maybe to look at from the bullish point of view. But I'm not going to be looking at it that way personally. This, again, much like utilities, there's just, to me, this is a little more of a messy chart, needs to shake out a little bit more to get what I'm going to be comfortable with. We do have a nice hammer that's going for us, but I mean, this is kind of a choppy chart, right? I don't think I'm alone in thinking that. At least I can't imagine I am. But I guess if I am, that's okay. We don't have to trade anything. We always want to be comfortable with what we're working with. So I think this is a watch early in next week. I think there's going to be other areas that I'm at least interested in. But very interesting that it did kind of catch that support level from days gone by as it's intraday low here today. A lot of pullback opportunities developing in the communication services sector as well. Haven't seen any signals just yet, but a nice upward movement on Wednesday and Thursday. A little bit of indecision stepping into the sector today, like everything else. Should be very interesting to see how this one shakes out. So as you can kind of see here, as we go through the sectors, I mean, we're not going to be lacking bearish retracement candidates for our watch list going into next week. There is no doubt about that. There will be quite a few to be working with. So, and you'll find some very interesting things, as I was kind of going through my list, I was finding, funny enough, I was finding even some potential bullish plays. I don't love them and they're not ready to rock and roll, but you have X-ray here that, kind of in a long sideways trend with a clear level of resistance. Not that I expect really a lot of bullish activity, but I don't know the future, right? Some potential breakouts. Dollar Tree, another interesting one where it's kind of drifted up sideways, hanging out below its 200-day moving average. Obviously not there yet, but maybe a break. So I was able to find a few things that could go into the potential bullish list if that's how things are going to want to go. Found a lot of really great looking, bearish retracements. ConocoPhillips, just as an example, we're up here at 61, 67 with our support level way the heck down here at 56.80. Found a lot of things that had a little bit of room, if they develop going into next week. Chevron was one of my personal favorites for a watch list next week. Big breakdown at a major level of support, kind of challenging that area. So there was a lot of interesting trade setups that'll be fun to watch going into next week, I think. So should be another fun week for us. As we kind of shift gears over into our volatility index, we did see it dip down today. I don't think we should assume that means volatility is going anywhere, but we did have a pretty laid back, especially by today's standards, day in the market. A little bit of dip over in that volatility index here today. We continue to go sideways. We're getting closer to testing that 96 support level over in the dollar. We're not there yet. That is a support level. I still think that the best way to approach this is to look at it from a neutral overall perspective, trading within this trading range. But we're getting closer to testing, potentially at least testing that support level. It'll be interesting to see where that goes. A break below that, I would argue, is a sell signal. Personally, obviously, it hasn't happened yet. Just like I'll argue a break above resistance is a buy signal. So it'll be, maybe we'll get some movement next week. Probably we'll just continue to be sideways, right? Because that's always a safe bet. What's been happening probably will continue to happen. So over in gold, we really smashed our head into that 1280 over and over and over these last few days. We were able to close above it at 1282. Nothing dramatic, nothing too exciting over in the gold market, but able to push through at least a little bit of short-term resistance. Not a bad thing, since a lot of folks are bullish, and the signals on gold right now are bullish. So can't imagine why anyone would be bearish if they're not in at all. That's fair enough, but I don't understand how they'd be bearish. Working our way, probably the next real challenge is going to be that 13. We may deal with a pullback before we get there. So kind of, mentally prepare for that if you're trading gold, whatever that might mean for you. Maybe that means you're taking profits here, on today's close. Maybe you're, converting or whatever it is. But, hopefully it just runs right up to 13. I know far more. Well, I don't know anybody who's bearish in gold right now. I know plenty of traders who are bullish. I hope it just runs right up to 13, makes it easy on each and every one of you. But it may need a little bit of a pullback, and that's going to be perfectly normal and fair if that's what has to happen. But certainly continuing our strength over there. Same deal with our silver. We were able to work up and smack into that 200 closing, kind of right there at that 200-day moving average. Again, much like gold, if it pulls back on us, probably shouldn't be shocked. But we do have a fairly clear path for a little bit more upside until we get into that 1570 range. Or thereabout. That's going to be probably a respectable challenge, as you can kind of see here. We spent a lot of time. There's a lot of old support in this area. So that's probably going to be a price that traders are going to be keeping an eye on. So I hope we get there and can make those decisions. But a good solid week, it was worth the wait. Right. I can only speak for myself, but waiting for silver to break 15. And yeah, in hindsight, I should have done a lot of things, but I was waiting for it to break 15. And this is why you're always ready. Right. Really solid week for silver. A lot of selling in natural gas today. We really saw quite a bit of selling, working all the way back down to these old highs. Continue to think that there's not really a good swing trade in here, by any stretch of the imagination. That support level did hold. If that doesn't hold, probably not unreasonable to think we're going to be pulling back and testing support and the 200-day moving average back down through here. And so still don't think there's a great setup, on the technical side for swing traders. Still a very good, intraday market to be trading if that's your thing. But, certainly a lot of selling here today and very conflicted. Again, when we go in and look at a weekly chart to kind of drown out some of that noise. All of a sudden, we had maybe a hammer when we looked at it just yesterday. Now we've got this big giant red candle, below the breakout point. So should be in, again, this has been a tough one as a directional trader, I think, for quite some time now. And at least going into next week, I'm going to be kind of feeling, unfortunately for me, the same way. But that's okay. There's plenty of other good opportunities out there. And lastly, over in the crude market, again, a very dull day. I mean, we really saw, a boring day in the market, which is all right by me. A lot of back and forth on the intraday, not really moving one way or another. But we did, very subtly, we're able to, put in that lower high here today. So we saw a little bit of change in that momentum off of that, intraday from yesterday. Still, want to see it take out this support level. I do think from a very short-term intraday perspective, breaking, this support level probably will present a short-term intraday type of opportunity. If we break support, probably no reason not to work back into this range. I continue personally to be bearish on crude, but I think I'm probably a little more on the cautious side than some traders I've talked to, right or wrong, because as we've kind of talked before, that 43 area is quite a bit of support. And if I'm in it, great, I'm comfortable with it. But I personally am going to respect that 43 as a fairly significant price point going forward. If that breaks, I think that would be another great sell signal for us. I was hoping, and maybe I'll still get it, to get a little bit of a deeper retracement on the crude market, because again, while there might be some intraday opportunities, swing opportunities, at least directional swing opportunities, going to be tough if we break this and you're like me and think you got to respect that 43. There's just not much room. It's going to be awfully tight and probably hard to get the risk to reward that you really want. So we'll have to kind of see where that goes. I think that 43 is a big deal. I'm obviously not a bull at 43, but I do think that that is an area worth keeping an eye on. That is a pretty, historic, at least speaking, respectably strong level of support. We've already seen some short-term, the short-term buyers really come in off of it. And again, I'm not one of them, but we have seen it. So it'll be interesting to see as we move forward. Maybe we can go a little sideways for a little while. That'd be all right. Maybe we can still work up, and get a little bit of a deeper retracement. That would be ideal, because I overall still am bearish, but I just at 43, I'm concerned about a swing trade right here. At 48, if I get a good signal there, I'm fine with it, because 48 to 43, $5, I can definitely make that risk to reward work. But from 45 to 43, that's going to be a lot tougher on a risk to reward level. Even though if it does break 45, I do think it'll come down to 43. Personally, I do think there's going to be difficulties finding a good risk to reward ratio trade if that's the way it develops. But overall, obviously, we continue to see a lot of weakness in the crude market. Whether or not you agree with 43 being a strong level of support or not, I think we can all agree that it's not showing any strength. So, ladies and gentlemen, boy, that was by our standards, that was one of our faster recaps as of late. But that's kind of what happens on dull days in the market. Everything kind of looked the same today. I think we know what kind of our game plan is going into next week. If you're looking for retracements, you're going to find them. Identify those areas that you feel the best, opportunities are going to present themselves wherever they might be. You may or may not agree with my evaluation or anything, and that's okay. There's lots of bearish setups. But we are going to have to pick and choose, right? We're not going to go into every single bearish trade we see, or we're in trouble. Abel, how are you doing, buddy? Good to see you. Over on HIG, interesting one. So we saw some nice upward move. I'm guessing you're kind of looking at this from a bearish retracement pullback. Is that right, Abel? So, and yeah, Happy New Year to you as well, Whitney. This will be our last recap of 2018. I won't be around on Monday. And then, of course, New Year's Day is going to be closed. We'll pick right back up business as usual and get right back into a normal routine, which I'm always glad. I enjoy the holidays. I enjoy having some time off and all of that fun stuff. But I really like my routine. I'm looking forward to getting back to normal. So, yeah, over here, Abel, I could definitely see where your head's at on that. We got a 50-day moving average kind of holding us down. General area of old resistance. I would have rather it not take that resistance level out. That because this was a pretty good break to the downside that you had here on HIG. I'm being a little bit nitpicky here. But there are a few things in here that concern me, especially when I compare to other areas. Now, I wouldn't fault anybody being bearish on this. First off, Abel, I wouldn't be bullish on it. But, we have taken out this breakdown point. Not a huge deal, not significantly. I'd want to make sure we were back down below that on a chart that looks like this. We've also seen a little turnover in our moving averages. If you'll notice, what's happened here is we hit that bottom, we ran up, we had more bears come in as it tested that breakdown point, came back to that support, and that support held. Now, it might have just been perfect timing, Abel, because the timing of it all, this was Christmas Eve, this was, the day after Christmas where everybody was buying like crazy. But whether it was or wasn't, we'll never know for sure. But we caught this support level, and now we've actually taken out this previous resistance level. And so there's just a few. We saw that 9 cross back above that 20-day moving average. So again, would I argue these are strong buy signals? I would not argue that personally, Abel, but do you see as you see them stack up, there are some positives in this chart, at least to my eyes. Again, I wouldn't be running off and buying it. I really love that the 50 kind of pushed it down here today for sure. But as I look, at it versus some other opportunities, or just compare them to some of the ETFs that, that we looked at here today and have looked at, together for quite some time now. I wouldn't say I believe that that's a double bottom, but we have to respect it, I think, Abel. And that's always the approach that I take. I may not believe in it. I might think it was blind, dumb luck that it happened on Christmas Eve and the day after Christmas. But regardless of whether or not it did or didn't, I want to treat it with respect that I think that support and resistance always deserve. And if we take all opinions about everything out of where we are in the market and just look at this chart, maybe we did hit the bottom, rallied up, hit the bottom, and took out that top. So I think you have to look at it from the point of view that maybe it is there. It might have been the Christmas thing. I mean, the timing on it is suspicious. I think we can afford to be picky on it. I love that it's kind of smashed into that 50-day moving average from a bearish point of view, especially looking at their personal history. We've bumped our head a few times there over the last little while. That's really, acted as a strong resistance level. So I wouldn't really fault anybody from looking at this from a bearish point of view personally, but there's just enough in there that, like I said, I think we can afford to be really picky, especially this week with the way everything's shaped up. Seeing that nice rally on Wednesday carry over a little bit into Thursday and then dojing here today, I think we can be a little picky. And if I see some things that, I don't love these as buy signals, but I do respect them as maybe some signals turning this over a little bit. Does that make sense? Able to see where I'm coming from? So it's that 50 should be tough, and that really kind of throws some ice on the fire. I wouldn't really be comfortable buying this from a bullish point of view because of that. Like you said, it kind of ran right into it and quickly closed off of that. So I do understand that side of things. If we fall back below here, I could see a case for it. But like I said, I'm going to respect this support level one way or another. And I think we can just afford to be very, very picky. Yeah, exactly. It may be kind of churning, going into that churn mode, as opposed to, more of a pure bearish retracement. At least again, and I might not be right here, wouldn't be the first time I was wrong by any means, and I don't think it's a bad bearish candidate, but I do think personally there are going to be more interesting candidates out there that we don't have just these little things. I respect that it broke resistance. I don't trust it, but I respect that it held support. I respect that we've seen some turnover in our shorter term averages, seen a little bit of upward movement. So, those would kind of maybe keep me shy, at least early in the week. Now, this could develop a couple days into the trading week to be a much different scenario. And so maybe that would be something to keep an eye on. But for me, I think, I'm going to try to find things that look a lot more like the actual trends of the ETFs that don't have that double bottom. I don't have to worry about a potential double bottom on XLY and that, right? Maybe I don't need to worry about it on HIG either, but that's kind of how, I'm going to approach it. again, I saw so many choices. I was kicking things out left and right. I wanted to have about 120 stocks in my watch list. I knew that was not reasonable. I knew that was too much. And so, I do think we can be really picky. And hey, you held support HIG. I might not believe in you. I might not trust that. But I have, dozens of other candidates that didn't do that. Maybe I'll look towards them. And hey, Zach, good to see you, my friend. Hope all is well. Got to talk with Zach here yesterday. It was a good time. Always fun. But yeah, I mean, that's how you can, how I will always approach, trading. Of course, Abel is, look at it from, we can afford to be picky. And on a week like this, especially, again, you may not like my individual stocks, and that's okay. But we have so many, stocks that do have no support levels, AXP and other financial stock like HIG, rally up just like, HIG did over the last 3 days. And maybe it's just lucky. It might very well be lucky on HIG. It very well may be with it playing it out those couple of days. But I think there are going to be areas, and again, you may or may not like AXP as a bearish candidate, and that's really okay with me. But to kind of illustrate the point, I think we can afford to be picky. We can find things that have a lot of room between, where we are right now and where their just swing level of support is. And that's how I will approach it. So yeah, and if you made me guess, I would say it did, Abel, to be honest with you. I don't think HIG maybe turned around on its own merits, at least completely, but that doesn't mean I'm right, by any stretch of the imagination. And like I said, it seems suspicious that it did it exactly on the market days where it was doing it. Right. But again, it's one of those things. It's there, why it's there. It's now there, right? All of a sudden, HIG becomes a much more interesting candidate maybe 2 weeks from now, in my eyes, if it breaks that support level. If this just got caught up in the market and, start selling off, if the market does in fact sell off next week, work back into that support level and break down all of a sudden, to me, this seems like something to be a little more interesting, maybe a week or two from now, when it's testing that 41 level of support as a potential breakdown candidate. As a retracement candidate, again, I just have to respect that support, whether I want to or not. I don't really want to, Abel, but I have to respect it. So hopefully that gives you some ideas. At least how I would look at a chart like this. Again, it has really nothing to do with the sector or the ticker symbol. I generally agree with where your head's at personally in this stuff. I just think we can, we always want to be picky. And again, you might love HIG, so don't let me, I might be wrong. It wouldn't be the first time, won't be the last. We want to be comfortable with whatever we're trading, of course. So, we just always want to kind of try to look at things as objectively as possible. And yeah, this is some support, whether I believe in it or not. So, all right, guys. Well, as always, guys, it is my pleasure. It's been a lot of fun doing the recap with you guys this year. I'm looking forward to another good, exciting year with all of you here in 2019. Like I said, this will be it for 2018 for us. We won't do the recap on Monday and Tuesday. The market will be closed, but we'll be back to business as usual with nothing in our way for another year. So for normal market recap business as usual, I'll be looking forward to that. But Happy New Year to you all, guys. It's certainly always fun hanging around with you guys, getting to know you guys, working with you guys. You guys are awesome. Certainly looking forward to a great year with all of you here in 2019. So with that said, have a great New Year's holiday. Be safe and be merry. Make sure you're getting through your watch list. Make sure you're getting through those scouting reports and the newsletter this weekend, so you're ready to rock and roll here next week. Should be some interesting trading opportunities for us. Try your best to find some potential bullish trade setups, because that might be the way it goes. I don't think it is, but I think it's always in our best interest to have some things in our bull playbook and our bear playbook. I'm pretty clear on what I think I expect to happen, but it might have a nice run. So finding a few bullish candidates that you'd feel comfortable is probably not a bad idea. Hopefully, at least from my point of view, hopefully you don't need them. Hopefully you get those bearish retracements, but always a good idea. But of course, have a great time this New Year's with your family. And I will look forward to seeing each and every one of you here on Wednesday. Business as usual in the market recap. So with that, ladies and gentlemen, get the heck out of here. Yeah, silver and gold, ring those bells, right? So we'll ring those bells. All right. Well, guys, thank you so much. As always, if you're new here, haven't subscribed to the channel, be sure to do so and hit that notification bell so you can be alerted anytime we've got some new videos or new streams going on over here at Tackle Trading. We love having you guys hang out with us. Always a lot of fun for us as coaches, for sure. If you haven't checked out our Twitter, check that out too. Definitely, throwing out some interesting things, or at least things that we think are interesting that we run into during the market hours on a regular basis. If you enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that it is helpful and it's fun for you. So with that, ladies and gentlemen, get the heck out of here. Say goodbye to 2018. Say hello to 2019. Guys, have a wonderful New Year's. Happy trading, and I will see you all on Wednesday. Bye, everybody.